perception out there, right? And a lot of people out there, they've also been asking that is unit trust, right? Is it a good form of investment? How do you even answer that?
Wow. I mean, it's important to notice that from, like, let's say, the previous two questions already, that a unit trust isn't technically an investment in itself. It's really very much a structure of which you can invest. So the difference, obviously, is that it would be very hard to say whether unit trust is a good investment because we just described a couple of different types of unit trusts, and so it's very hard to tell whether it's good or not depending on what kind of unit trust it is. So that's one. And so in that sense, you have to constitute what is good, because what is good to, let's say, a 62-year-old woman who needs passive income on a regular basis is not going to be as useful for a 25-year-old who wants to try to make 10-20% annualized returns every year. So let's look at an example of what good really is like, to just to distinguish this difference or highlight this difference a little further.
Yeah.
In the end of 2002, Apple as the individual stock was priced at about 14.33, and then in 1st February of 2020, which was actually just 2 months ago, it was about $310.
Yeah.
So to emphasize this, it increased by over 2,000+%. The annualized return on that is somewhere between 18.6 and 19.9, depending on what kind of range you're looking at. So the compounded interest for that as the individual stock is just insane. While if you look at the collective investment scheme system, for example, if you looked at an index like the S&P 500, which is, you can usually invest through an ETF, exchange traded fund, as a form of unit trust. You can invest through that unit trust, so to speak, and that same unit trust with 500 stocks only increased by 7.5%. So Apple outperformed that particular unit trust like by almost 3 times, which means that if you had invested $100,000, you would have returned 3 times as much from Apple, roughly. In relation to how much you could have compounded across the last 18 years. So it's quite hard to define what is good because many people would be quite satisfied with 7.5 until they hear about a case study like Apple, where you get annualized return like 19. And so if you really want to define what good is, you have to be aware of both the risks and returns and see whether good is suitable for your very specific profile. Because if you were investing in something that hadn't been Apple, then there's a pretty decent chance that you wouldn't even have gotten anywhere close to 7.5. While if you were really good at investing generally and you really want a good investment like that, then you would have to learn a much harder degree on how to pick up stuff like Apple. Does that make sense?
Yeah, definitely.